Hi guys, it's Mr. Billens here. Welcome to my YouTube channel where I will be sharing tutorial videos that will help you to become a better trader, a more skilled trader. Today I want to share about the number one concept that you should master if you are a beginner trader, which is market structure. Okay. Before I dig deep into it, I just want to say trading is not as hard as it is portrayed to be. It shouldn't be as hard as some people make it. And I believe that in order for it to become less painful for you, you just have to master the basics, master the fundamentals, and you will generate a momentum which will take care of itself, and the results will come by themselves. So, what is market structure? Basically, so market structure by definition is just the market conditions. See, the market is moved by buyers and sellers. The market is moved by supply and demand. So we're saying currently at a given period of time, what is really happening in the market? What is driving price? Is it the buyers or is it the sellers? Who is in control of the market? That is basically market structure. Why is this so important for you to know? It's because basically what you will do in the market is based on those two factors. Are they the buyers in control or are they the sellers? Which will determine whether you're going to buy or you're going to sell, whether you're going to be buyer biased or you're going to be seller biased. So we have three types of market structure. We have the bullish market structure and we have the bearish market structure. Okay. The bullish market structure is where the market is going in an uptrend. So the market is moving upwards. That's the bullish market structure. In this condition, we have buyers in control. Then we also have the bearish market structure where we have the market moving downward. This is where we call the market structure currently is in a downtrend. The market is moving downward. Here, the sellers are in control. The third market structure type that we have is the range bound or the consolidation market structure. This is where we don't really have anyone who is in control of the market. It's not the buyers who are controlling the price movement. It's not the sellers who are controlling the price movement. Matter of fact, there is a fight between these two. So basically, these are the three types of market structure. So in these market conditions, price does not move in a straight line. Price never do. It never moves in a straight line. If so, everybody would be fucking rich right now. Forgive my language. Everybody will be filthy rich right now. But price does not move in a straight line like this. Rather, price moves in waves. Okay. The reason price moves in waves is also part of it. Part of the psychology behind price moving in waves is because there'll be fights between buyers and sellers. They are trying to find the equilibrium price. They're trying to negotiate between prices. So price is never linear. It's not moving in a straight line. It's never moving in a linear direction. Rather, it's an upward, downward. But overall, the trend direction is either going to be bullish or bearish, or it's going to be consolidated. That is why price moves in higher highs and higher lows, higher highs, higher lows, higher highs, higher lows in terms of a bullish upward trend. In a downward trend, price starts with a low and a high. Then when it's moving, it's going to move with lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. In a consolidative structure, price is just gonna have relatively equal lows and equal highs. There is no lower lows and lower highs. The moment price starts to break the highs and the lows, that's when we know the price is moving either up or downwards. Okay, that's how price moves. So it's very important. So the psychology behind this is that in an uptrend, we have demand in control. We have high demand, therefore price is going to keep going up because when demand is higher than the supply, we have price moving up. We have higher price. It's basics economics. In a downtrend, we also have the same thing. When we have when we have more supply than we have the demand, price is going to drop. So that's what basically what will be happening in a downtrend. But in a consolidation now, we're saying probably the supply is matching the demand, therefore price is at a stagnant level. There's no higher price, there's no lower price. Price is balancing. So what's be happening in a consolidation market structure is that there's a fight between buyers and sellers. There's really nobody in control of the market. So this is basically what we have for market structure. We have these three types of market structure. So when you open your charts, what you want to see is to first you want to determine what market structure is currently playing out. Are we in an uptrend? Are we bullish? Are we in a downtrend? Are we bearish? So when we are in an uptrend, uh, we are bullish. When we are in a downtrend, we're basically bearish. That's when we say bears are in control of the market. When we are in a consolidative, we are neither bullish nor bearish. That's basically what be happening in these market conditions. So it's very important that you know these and you master these three types of market structure and you understand them. And the schematics are exactly what I just showed you down here. These are the schematics of these market structure conditions. You have to master them because these will determine whether you're going to press a buy or you're going to press a sell. Okay, so right now we want to hop in and we go to the real chart examples. So I'm going to go to my MT5, my MetaTrader 5 right here, and I'm going to give you some examples of these market structure conditions. So right here where I've highlighted, it is very obvious that the market is dropping. The market is going downwards. So this is a downtrend. The market is bearish within these parameters that I have marked. So what is happening? Like we said, the market does not move in a straight line. The market moves in higher highs and higher lows. So basically we have this high and we have this low, right? For us to know that the market is confirming the momentum to the downward, that the market is moving down, it has to form lower lows and lower highs. So look at this. This is a lower high and this is a lower low. And we go again, lower high, and we have a lower low. So this by definition, we have the market structure confirmed that it is downtrending. The market is moving downwards, right? Same applies here. If we mark this area right here, you can see that the market is dropping. The market is downtrending. So we have this high and we have this low. We also have this lower high and we have this lower low. Again, lower high and lower low. So the Dow theory, as it confirms that it's only when price violates some of these, when we're in a downtrend, it's only when price breaks a lower high that we can say the market has shifted structure and has changed the market condition. So now it's changing direction. So like here we have this lower high and this lower low, right? And we have this lower low, but instead of having a lower high right around here, price went on and broke this high, this lower high, the most previous lower high, and price made a higher high. And here price went on and made a higher low and went again, made a higher high. It went on higher low and price is still making these higher highs, and here we have a higher low. So by definition, this is an uptrend. So if we are to mark this whole area right here, you can see that this is an uptrend. The market is bullish, the market is going up, right? In the terms of a consolidation, an example of a consolidating market is right here. We have this low and we have this high, right? We also have this high, it's in equal high, and price went on here and made an equal low. So basically the price is neither making lower highs or lower lows. Price is making constant highs and constant lows. So we have market consolidating. This is what we call the range bound market structure. This is what we call um, the range bound market structure right here. So basically that's it. That's what sums it up. So what you're going to do in the market is based on these market structures. Because why am I saying so? You cannot buy against the trend. They tell you follow the trend. The reason is because you want to go together with the dominant controllers of the price at the moment. If you are in a downtrend, the sellers are controlling the price. They are pushing price lower and lower, and so you want to sell because the market is going down. You can't buy against these guys because these are the guys who control the market. They control the price. You do not. Basically, as retail traders, what we do is we take advantage of our knowledge of market structure and we join these trends. If the market is consolidating, we do not want to participate. That is basically what it is. So, what I want you to do, the assignment that I want to give you, I want you to rewatch this video and then you take note of the key points that I've been pointing in this video, especially these schematics, right? I want you to take a screenshot of this, take note of this, rewatch this video, and I want you to go into your trading view, or I want you to go into MT5 and I want you to draw out the market structure in real charts. I want you to train your eyes to see this market structure in real time. I want you to backtest this so that you train your eyes to see this, because without mastering this, do not consider even opening a demo account, bro. Do not even consider even funding your account at all, because this is what determines whether you are going to make money in this market or you are going to donate money in this market. If you want to donate money, it's okay, you can go before you are ready and you lose. But if you are wise, you're going to master these basics. Train your eyes to see these things until they become your second nature. So go into the market, go into your charts, and start looking for these examples, right? You see, I can see it everywhere because my eyes are used to it, right? Right here, you see these higher highs, prices making these higher highs. Also, at the same time, we have these lows that are making higher lows and higher lows, right? You see this? Higher high, higher lows. So when the market is pushing in this uptrend, in upward structure, you do not want to go against it. You do not want to look for sales when the market is doing this. At the same time, you can see over here we have these lower highs, we have these lower lows, lower highs, lower lows, lower highs, and lower lows. So the market is pushing down in this movement. This is a downward movement, right? So go train your eyes. See this. I want you to do at least 10 examples of each. Go look for 10 examples of a downward trend with these schematics of the market structure. Go and look for other 10 examples of an upward trend and go and look for 10 examples of a consolidated market. With that being said, thank you for tuning in. If you have made it this far of the video, it shows your determination and shows that you are really seriously taking trading professionally. And I wish you success. And I will keep showing up and I will keep posting YouTube videos that will help you to enhance your skill. Because as long as you are mastering the basics, the rest is going to take care of itself. With that being said, cheers, guys. See you next time on my part 2 of the market structure. In my next video, I'm going to show you how you are going to take advantage of this knowledge of market structure, how you're going to take trades, how are you going to find opportunities to join these controllers of the market, how are you going to join the buyers, how are you going to join the sellers. Okay, so cheers. And these are the 3 types of, so the psychology